Hi everyone. Thanks again for joining us. For during your lunch hour. For our corporate insights webinar. We have with us today. We're very honored to have with us VinFast, excuse me, and Mr. Chien, who is the investment director for VinFast. So VinFast is the up and coming as well as the leading EV producer and maker in ASEAN and in Vietnam. So I think since we have reached 12 p.m., without further ado. I'll hand it over to Mr. Chien. Sorry, but before that, do put in any Q&A that you have, and any questions that you have in the Q&A tab below, and we will be sure to get to them in the second half of this webinar. So just without further ado, I'll hand it over to you, Mr. Chien. Thank you.
Thank you very much, Glenn, and hello to everyone. Yeah, my name is Chien, and I'm the Chief Investment Officer of VinFast, and it's our privilege to be here today with our trusted partner, Phillip Securities, to tell our story again, and probably for the first time with many of the attendants here. On the screen today, I will go through the company presentation for July 2025. This will take about 20 minutes. And after that, as Glenn suggested, please feel free to send any question to the chat, and I'll address them one by one. So first of all, for those that do not know about us yet, VinFast is a Vietnamese-based electric vehicles OEM that is listed in the US. Our story started just 8 years ago in 2017, where we were founded as the automotive arm of Vingroup. And Vingroup is the most prominent conglomerate in Vietnam with business activities across real estate, hospitality, technology, social enterprises, and so on. We spent the first 3 years of our existence between 2017 to 2022 to develop the foundation of our business, including the establishment of the very first factory in Hai Phong, Vietnam, which remains to be our flagship factory until today. During this period, we introduced to the market 4 different car models, and all of them are internal combustion engine or ICE. In parallel, we also developed 3 models of e-scooters. When it gets to 2021, 2022, we shifted to the next phase, what we call the electrification. During this period, we were the first OEM globally to fully pivot from IC strategy to an EV-only strategy, and it remains the case until today. This period started with the introduction of our first 2 electric vehicles model, the VF E34 and the VF8. Both of them are still selling very well today. Besides, we also introduced 3 models of electric bus and 6 additional models of e-scooters. We announced the plan for our very first overseas factory, which is the factory in North Carolina, the USA, which is expected to commence operation in 2028 with a design capacity of 150,000 vehicles per year. And for those that are not familiar, design capacity is the maximum output in terms of vehicle that one factory can produce in a single calendar year. In 21 and 22, we also expanded our presence to the USA, Canada, and a few European markets. Now, we are currently in the global expansion phase between 23 and 25, where we remain the first and only EV OEM of the whole Southeast Asia that have reached mass production. And it is not wrong to say that we are pioneering the region EV dream on a global stage. During this period, we have introduced a total of 10 different electric 4-wheeler models and 1 concept of a pickup truck, the VF Wide in the middle that you can see there. We continue our penetration in the e-scooter and e-bike market with 2 new models. When it comes to manufacturing, this is a period where we show the ambitions in key market with the announcement of 3 CKD plants, 1 in Hatay, 1 in Tamil Nadu in India, and 1 in Subang, Indonesia. And we are very thrilled to announce that the factory in Hatay in Vietnam has started operation just 2 days ago. And we expect the CKD plant in Tamil Nadu, India to start operation by the end of this month. In terms of sales evolution, Today, we have delivered to the market over 260,000 cars and 350,000 e-scooters. The sales trajectory has increased significantly in the last few years, starting with 7,000 electric four-wheelers sold in 22. We have now reached 97,000 by the end of the last financial year, 2024, and we have set the target to at least double the number in 25. So when looking at 2024, we recognize that this was a monumental year for VinFast because we have become the #1 car manufacturer in Vietnam, overtaking overseas competitors like Hyundai or Toyota, those with decades of experience penetrating international market. We closed the year at 97,000 vehicles globally, 87,000 of which comes from our home market in Vietnam. The most important achievement to us in 2024 was the successful introduction of the two models, the VF3 and the increasing penetration of the VF5. Why was it so important? Because with these two models, we have proven to the customer in Vietnam that EV are not as necessary a premium good. Everyone can own an EV at affordable price with good design and very strong build. The VF3 and VF5 had altered the perspective of the people in Vietnam and given them the chance to skip straight from electric scooters to electric four-wheeler without having to go for ICEs in the middle. In combination, these two models account for about 60% of our sales in the previous year. The success of the two models has pushed us to start selling them in similar market in Asia. We're talking about the key market of Indonesia, the Philippines, and so on. So year to date in 25, we have continued our work inside and outside of Vietnam. Our taxi partner GSM has started the operation in both Indonesia and the Philippines. And we have signed MOUs and agreement with local business in both Indonesia and Philippines to support our go-to-market there. We continue to introduce additional models to these key markets, including the VF6 in the Philippines and Indonesia. And we also deliver the VF3 to customer in Indonesia only within 2 months from sales opening in Q1 this year. Speaking of Q1, we have continued the strong momentum from the previous year, delivering 36,000 electric vehicles globally and 44,900 e-scooters. In terms of operations, our partner has expanded their network of charging points to more than 1 million charging points globally, meaning that if you own a VinFast, you'll be able to access more than 1 million charging points. And we also have 388 different showrooms across all our market in Vietnam, Southeast Asia, in India, in North America, and Europe. Now, if we dive a little bit deeper into the story of VinFast, we recognize ourselves as an EV company reaching the inflection point, and this is driven by a few key factors. First of all, today we have the most diverse EV lineup globally, consisting of 10 different models already commercialized and one more in the pipeline. Our vehicle model can be split into two key buckets. On the left-hand side, you have the personal vehicles, and on the right-hand side is the commercial line that we're introducing this year. On the personal vehicle side, we have the accessible model of VF3 and VF5, as I mentioned before, designed for more urban mobility purpose and fit with the budget of the mass population in Vietnam and in Asia. We also have the affluent model, the VF8 and VF9, the very first model that we developed with a lot of premium features and spaciousness, which are very well liked by customers in more economically developed countries, the USA, Canada, the Middle East, and Europe. And then in the middle, we have the aspiration model of VF6 and VF7, those that really follow the philosophy of mass premium, the car that everyone can afford with a lot of good features and pricing in the middle range. You can see that In terms of personal vehicles, our pricing range starts from 11,000 US dollar per vehicle for the VF3, all the way to 58,000 per vehicle for the VF9. The wide pricing point really shows our ambitions to create a product and a lifestyle for each and every single customer needs at every single pricing point. Now, looking to the right, our newer models in the transportation service consist of 5 different vehicles, right? 4 of the Green Series and 1 new EC vans. With the introduction of this model, we become the very first EV OEM globally to have a dedicated product lineup for taxi, ride-hailing, and transportation purposes. And yeah, besides that, we continue our presence in the e-bus, e-scooter space with our 10 different models at the bottom. A bit more insight on the Green Series. So the Green Series consists of 4 models for taxi and ride-hailing, and it has already started selling very well in the home country of Vietnam. Taxi and ride-hailing remains an important element of our go-to-market because we believe that shared mobility is a strong catalyst for the electrification mega trend. The Helio Green and Negro Green are adapted version of our previous VF5 and VF-E34, purposely redesigned for taxi applications. The Minio Green and the Limo Green on the 2 sides are brand new vehicle models. One is for small mini car transportation, and the Limo Green is our entrance into the MPV segment, 3-row spacious and with good features. The Limo Green and the Minio Green will go to market in Q3 this year. Now, we believe that customer service and after sales are a critical component of the EV experience, which is why today we have invested a lot into our differentiated after sales service. This includes the best-in-class warranty packages of 10-year or 125,000 mile warranty for the vehicle, and up to 10-year and unlimited mileage for the battery. We also provide on-demand and personalized service, including OTA, user applications, and service centers. On the charging side, as I mentioned to you, 1 million charging points globally, including about 90,000 charging points directly owned by our sister company, VGreen in Vietnam. In Europe and in America, we partner with well-known charging infrastructure partners, including the like of Charge Hub, Electrify America, EVgo, and Blink, to name a few. So on to the next stage, manufacturing. We recognize the importance of manufacturing excellence to the success of the OEM. This is why, from very early on, we have invested into a state-of-the-art manufacturing complex in Hải Phòng, Vietnam. The manufacturing complex consists of 16 different shops, and with a design capacity of up to 300,000 vehicles per year. It was built within only 21 months and was fully pivoted for EV production in 2021. Today, we have a local sourcing rate of 75%, meaning that the components of our car are mostly sourced from within Vietnam. Besides local sourcing, vertical integration is a key pillar of our manufacturing philosophy, meaning that we will not only assemble, but at the same time have shops for key components. We try to produce and develop critical components of the car to the extent possible. And this is facilitated by the presence of our top partner, our tier 1 suppliers within the industrial park, including the name of Lear Corporation from the US, Forvia from France, Antolin from Spain, and ZF from Switzerland, to name a few. And by locating close to them, we realize significant logistical economy of scale and cost saving from the supply chain side. In terms of automation, we have one of the most automated production arrangement in Southeast Asia, with more than 1,400 different robots, and the automation rate in key shops has exceeded 90%. The success of the build-up of our flagship factory in Vietnam has set the cornerstone for our expansion globally. As I mentioned earlier, we have introduced a second factory in Ha Tĩnh, Vietnam, which is dedicated to affordable models, the VF3, the EC van, the VFR, the Minio Green. At the same time, to support our sales in India and Indonesia, we are working on two CKD blends there. The one in India will commence operation at the end of this month, July 2025, with Indonesia follow shortly within the following months. Our plan for the factory in North America remains in place, and by 2028, we expect to have a design capacity of at least 750,000 vehicles per year, sufficient to cover our expansion across the globe. Besides manufacturing, we are an EV company that focuses on technological enhancement. And today, this is done through a combination of our in-house engineer and expert. Those belongs to the wider Vingroup ecosystem, as well as the partnership with our global leading technology partner, including the like of NVIDIA, Stardot, Samsung, Aptiv, Autobrain, Vector Informatic. When it comes to in-house engineer technology, we have integrated a lot of technology developed from the ecosystem of Vingroup, including VinAI research, Vin Big Data, or the cybersecurity solution from VinCSS. We are very happy to let you know that at the moment we are actively working on the next generation of vehicle platform, EV platform, which we will start implementing from on the Limo Green model from Q3 this year. The new architecture will consist of new EV platform together with the EE system that utilize the centralized supercomputer. So it is very exciting time for us as we completed the first generation of vehicle and start thinking of how we can make things more efficient, make things better and more technology co-equipped. When it comes to go-to-market, at the moment we are adopting a flexible combination between direct-to-customer own showrooms and distributor showrooms, with direction of shifting toward distributors in the future. This is a strategic decision that we have been executing since late 2023, where we finished the brand building stage and start looking into scaling up. Today, we have 388 showrooms globally, with the vast majority in Southeast Asia, with 46 in North America, and about 8 showrooms across EMEA. This is just the beginning of our expansion, and we expect the number just to increase in the future. One of the very last slides I want to touch base on is our unique green ecosystem approach. What is the green ecosystem approach? It is a combination between VinFast and sister companies under the common ownership of our founder. It consists of Xanh SM or Green SM, the #1 EV taxi company in Vietnam, now expanding to Southeast Asia. GSM was a critical element of the success that we have in Vietnam, because it offers the customer in Vietnam a chance to try our vehicles before their purchasing decision, and ultimately help them realize the benefit edge of owning an EV, a VinFast EV in particular. VGreen is a company managing the network of more than 80,000 charging points in Vietnam, and they are also deploying their charging infrastructure in Indonesia and the Philippines. As you might or might not know, anyone who owns a VinFast car in Vietnam will have free charging offer by our founder, by VinFast and by VGreen until middle 2027. So customer can really, not stress about the cost of ownership for the next 3 years and really enjoy the benefit of using an EV. Besides this, Green Future is the newest addition to the ecosystem. This is a second-hand sales and leasing company exclusively for EV, for VinFast EV as well. It will help EV even more accessible to the public, while setting, a stable resale value for them. And the last slide in the deck today, I'll talk briefly about Vingroup, because it is obviously impossible to tell the VinFast story with the support from our mother conglomerate. So Vingroup is the largest conglomerate in Vietnam and one of the most prominent in Southeast Asia, with a business activity across three different verticals: industrial and technology, services, and social enterprises. It has experienced constant growth between 2020 to 2011 until now, with a consolidated CAGR about 41%. And during this period, they have ventured into many different fields. However, VinFast remains to be at the heart of their growth story, and we received full support from both Vingroup and the founder, evidenced by the 3.5 billion US dollar supporting package from the end of last year to ensure that we'll be on track to break even by 26. Um, so that I believe this is the very last slide on the presentation. I'll stop there and hand it over for Glenn to moderate the Q&A session.
Hey, thanks so much for that very insightful presentation. We get know more information on VinFast. I think the burning question on everyone's minds here is when will you guys be coming to Singapore, right? So that we can experience the cars for ourselves. Yeah. So I mean, we would like to support our our ASEAN companies. Yeah. So that would be, I guess, the dream if you'll be coming to Singapore for us to see your cars. So without further ado, I think we do have quite a few questions in the Q&A chat already. I will just go through them one by one. We have the first one here. I think we touched on this a bit earlier, about the how the Xiaomi EV car sold out 300,000 units in 1 hour of launching. But there have also been reports, on BYD sort of slowing down production, or I think it's more like inventory is stocking up, right, for BYD, and they are the biggest player in China. So this is not really related to VinFast, but I think more of the whole EV ecosystem. But where do you see the demand heading in China? And I think the larger question is whether there will be a consolidation soon in China, as many of the smaller players are sort of throwing in the towel or losing to the bigger players like BYD, Tesla, and Xiaomi.
Yeah. So obviously, VinFast does not sell in China yet. So I wouldn't be the best expert on the Chinese EV scene, but we do have a lot of respect for them because China today is the only country globally that have reached mass production on the EV side, and there's a lot of redundant capacity there. We know that there's probably 100 or more EV brands, and it's really overcrowded, meaning that consolidation will happen sooner or later. And in reality, a lot of the EV player in China actually have exited the game. We expect a few key good players to remain in place. You name a few, right? BYD, NIO, Xiaomi is a rising star as well. From 22, 23, we already know that because of the competitive tension within China, the EV companies over there started thinking of overseas market as a place to reach out to and utilize all the manufacturing capacity. The reality is with the geopolitical politics happening in the world today is quite restricted for them because and this is something that we recognize VinFast is having an edge because we come from a lower cost country, but with friendly relationship with key with all big countries, right? I think the US and India are almost no fly zone for Chinese OEM. They are also having a bit of difficulty when it comes to legislations in Europe. So Southeast Asia will be a place where if they stop up, right, they will try to sell too. And we are going head to head with them in Indonesia and in the Philippines. Very exciting time. We have a lot of trust in the quality of the pricing of our vehicles. VinFast might not be the cheapest one, but we do offer a lot of good features, right? And our car well designed. Early feedback from Indonesia and Philippines has shown that our car is as good as one from China. When now coming back to your question, right, with BYD stocking up, we do expect a wave of sales going into Southeast Asia, including Vietnam. I think the key entry barrier that might create a little bit of difficulty for them is the fact that charging infrastructure in Southeast Asia isn't as well spread as China yet, and it will remains the case for at least 1 or 2 more years. And they will have a lot of things to do on the charging side in order to really win the market the way that they wanted to.
Yeah, thanks a lot for that. Yeah, I think it gives us a lot of insight into the Chinese EV markets, especially from an industry expert like yourself. I think, just for myself, right, looking at the US, right, you look at Tesla. I think Tesla is in Vietnam as well. I saw a few cars when I was there. The recent results that they have shown, deliveries were really, really bad. Is there a warning sign to other EV makers, to ensure that you are on the right track? If not, you will end up like Tesla, where you see deliveries drop drastically? Or like how's the competition like with Tesla?
I think right, Tesla will remains one of the best EV brand out there. They have been and they will continue to be so. Their falling sales in the US is a factor of many different elements, right? So one is the tightening geopolitical and tariff, um, landscape in the US, and the fact that the new administration over there is not really supporting of EVs. We also face with the same problem, right? Because we can see that the new policy really favor traditional OEM, the like of Ford or GM, um, Ford and GMs. Uh, but at the same time, I do see that the focus of Tesla has shifted a little bit. Now they are looking more into the futures with their self-driving features, and they really want to become a champions not only in EV but also with AI and with ADAS, AD, autonomous driving. So in that sense, right, I would say it might not be necessary that they are falling behind. It's just that they are taking some steps to prepare for a longer battle in the future. So nobody can really underweight them.
Oh, great. That's a very good insight into how Tesla is performing. Yeah,
Yeah.
so back to the Q&A, on VinFast. Someone asked, with Hatin now online, adding 200,000 units, and Haiphong targeting about 950K next year, you're approaching your 1 million annual output goal, mostly for domestic demand. So how do
Yeah.
you prioritize the capacity allocation between Vietnam, India, Indonesia, as well as the delayed US plan through 2028?
Yeah. Okay. Let me go to that slide with the design capacity, right? So yeah, just to clarify, Hatek is now live with 200,000 vehicles capacity. At the moment, the design capacity of Haiphong is still 300,000, and we can expand it to 500,000. Over time. I think the 900,000 is a very long-term view, probably toward the end of the decade. And the number for the international market, you have them here. Uh, we have already calculated and mapped the demand of each and every single market. With the 50,000 for India and Indonesia, it will take care of the local market for at least 2 to 3 years. For the two in Vietnam, right, for Haiphong, we will continue focusing on most of the model except for the smaller one. Ha Tinh will produce the VF3, the Minio, the EC van for now, and a few more affordable models in the future. And between those two domestic brands, we will be able to realize significant cost saving coming from specializations, right? The Haiphong brand, the flagship brand, will in the short term remains the I'd say sourcing location for components to each of the CKD plants. So it will hold a strategic importance there. At the moment, we are selling, say, 150 to 200,000 vehicles within Vietnam. So with the two plants in Vietnam, it will be sufficient to service the local market and to produce for international market in North America, in Europe, in the Middle East, except for Indonesia and India, for obviously. Over time, toward the end of the decade, our forecast is looking toward the born path that the question raiser has mentioned, and we will see the growth trajectory to ramp up gradually over time from 300,000 to say 750, 800,000 by that point in time. Yep.
Okay, yeah, thanks for that. Now moving to India. Someone's asking, you're launching the VF7 and VF6 in India with 120 service centers. Uh, However, the Tamil Nadu facility currently doesn't qualify for the national incentive programs unless you increase your investment. So will you be scaling up your investment to assess these subsidies, or is it offsetting through volume strategy more compelling?
Yeah. Okay. So first of all, let me quickly talk about our strategy for Indonesia, for India, right? So the VF6 and VF7 was the strategic decision for us to target, the mid segment of the market, which is currently lacking EV offering. Both of them are very well designed with their, sporty features. We expect that it will help us establish a differentiated brand in the country. And for the first half of this year, we have been working really hard to expand our service center and sales for them to be ready in place when we start production later on in this Q3. Now, on the question on the scheme to promote manufacturing electric passenger car, we actually have followed the announcement of the scheme from the very beginning on the 15th of March 2025, I believe. And after detailed assessment, we do believe that the scheme does not align with our current operational model as well as investment roadmap in India. A few key reasons I can name is, first of all, the scheme is really focused on CBU-based market entry. Why so? We have already set up a factory there for local production, for CKD production, right? Secondly, the scheme requires a minimum investment commitment of 500 million USD over 3 years period. Why we have a long-term investment plan in place for India during this period? Our capital deployment strategy is phased in a manner to support capital ramp-up and market growth over time, right? So binding to such a huge, number earlier on will remove the flexibility for us to, play around and adjust our plan over time. And the scheme was formally announced in 15th of March 2024. The guideline was issued in June last year. We already began our capital deployment for the factory in January 2024 prior to announcement of the scheme. So hence, it's timing why it doesn't work for us. We know today that there's no well-known EV OEM or traditional OEM really applying for the scheme yet. So to your question, we do not see that we are missing out on anything. It just simply doesn't work for us, right? It was a strategic decision.
Okay, great. There's a lot, really very clear insight. I think there's two questions here, really on the margins and the losses. So it says that Q1 showed improved margins at negative 35% versus negative 59% in the previous quarter one 2024. But you're still losing on each vehicle. So what's the roadmap? I think you did mention that you intend to break even. But what's the roadmap to reach this break even volume or pricing, and what levers, for example, the supply chain, localization, or pricing, are you targeting the most aggressively?
Yeah, thank you. This is a question that I got asked a lot, right? So first of all, if you look at Q1 this year, everyone can see from our earnings call that it shows a significant improvement compared to last year, Q1 last year, and it is a result of the much bigger scale that we're operating now. I think Q1 last year we deliver maybe 1/3 or 1/4 of the number that we deliver in Q1 this year. But even if we compare Q1 this year to Q4 last year, which was the quarter that we deliver more than 50,000 vehicles, the number, if we adjust for abnormalities, right, the profit margin was roughly the same, meaning that we have already got improved, true margin, even if we're producing a slightly smaller volume now. We expect this to continue throughout the year as we ramp up production again. So one thing that you should know about the car market in Vietnam is that it is very seasonal, right? Q1, there's always lower volume. And this is for any OEM, not only VinFast. So throughout the years, we ramp up again, and we expect to see improvement in margin coming from a few key factors. First of all, optimization of bill of materials, meaning that on the purchasing supply side, we'll be able to negotiate better deal with higher volumes. And at the same time, we have engineering initiative internally to ensure that our bill of material can be reduced over time. It comes from removal of excess functionality, or being able to provide the same functionality with a lower component cost. Second one, improvement in production cost. Obviously, this is a factor of engineering and a factor of skill. Just to put in perspective, right, in 2024, our bill of material and production cost has improved by 34% and 50% respectively, right? And we haven't even reached, the design capacity of our flagship store in Vietnam yet, factory in Vietnam yet. So we expect the number to continue to improve. So moving away from manufacturing side, from on the operating expense side, one of the biggest initiative that we have been working on was the shift in distribution model from own showroom or direct to customers to distributor model. With this, we'll be able to save a lot of operating costs and at the same time expand a lot quicker, utilizing the local expertise of our distributor, whether it is in Southeast Asia, whether it's in Europe, or whether it is in the US. It will drive improvement on EBITDA level. Now, part to profitability, we have announced before that we are aiming for EBITDA break-even in 2026. And in terms of early sign of progress, right, we can tell you today that our high volume model, some of them has already break-even and gross profit level. If we are taking our non-cash item and D&A, if we take our abnormalities, for example, the one-off impact of the free charging program in Vietnam, or the impact of net adjustment or impairment on net realizable value of inventory coming from market movement in price. So net, we are on track and we'll continue working hard with a clear line of sight on getting to break-even.
Okay, yeah, thanks. There are actually two related questions to this. I think there's another question is asking, do you see any scale point? So I think it's more of like, where external funding becomes unnecessary. I think you mentioned, you got this funding from the Vin Group, right? Or is continued support from the Vin Group and the CEO grants essential?
Yeah. So as organizations, right, we keep our mind really open to external funding, and we have, capital raising team looking at opportunities out there. And I personally, right, speak a lot with a lot of potential funders or investor. But I think it's clear for VinFast is that we are not going to take external capital as unfavorable valuations and unfavorable terms, right? Anyone who follows the EV market knows that compared to the earlier time in this decade, the capital market for EV is not as exciting anymore. A lot of OEM has to raise fund in very, very, unfavorable pricing. And this is something that our chairman and Vin Group really wants to avoid, which is why they have shown, full commitment in terms of funding. At the same time, we are active on the debt capital market as well. We're working with a lot of financial institutions, with a lot of banks, and we have supporting banking partner for our project financing in Indonesia. In here, we also have global renowned banks offering, corporate level loans. So those two instruments will be sufficient for us to get to break even. But at the same time, as I mentioned, we keep our mind open to equity market opportunity as well, whether it comes now or whether it comes in the future after we break even. We keep our mind open to it.
Okay. You touched on the dealership, right? The dealership network and shift to that. So this question is asking, the shift from direct to consumer to a dealership network in California comes after weaker demand as well as tariff pressure. So what metrics will define the success in the US? And do you plan a hybrid model or full dealer rollout across other states?
So just to clarify, right? All our D2C showrooms was in California. Yeah. And the reason was because California was the very first state that we got to in the US in 2023. And we wanted to be in full control of our initial expansion and our brand, building in the US. All new showrooms in the US since early 2024 in other states, 10 plus states, right, was open using a dealer model. And the decision for us to shift, close all the D2C showrooms in California, has already been planned from before because, it works really well in other states. in due course, we need to use the same in California. And if you follow VinFast, you know that we have shifted more than 200 showrooms in Vietnam from our ownership to external partner in 2024. Right? So it was a role model, and it was a strategy that we executed in Vietnam and then leveraged to the US. It wasn't, it wasn't because of pricing or pricing pressure or low sales number or anything. But it's interesting that just within about a month after our announcement of the plan for the closure in the US, we have the news from Liberation Day on the tariff. It was something that we kind of foresee, and we took the opportunity to fine tune and to fine tune our footage in the US, ensure that we are prepared from operational point of view, and we are prepared for what's coming next in the challenging market over there. A good news for us is that because we kind of knew something was coming, we actively shift a good part of a few thousand vehicles in the US before the announcement of tariff, and this will keep us stocked for at least a few more months as we monitor the market development.
Yeah, that's quite good foresight. Yeah. I think there's one on the charging, right? So beyond my TVS in India, what's your broader strategy for building service and charging networks in global markets, especially in markets where you're new and infrastructure remains fragmented?
Yeah. So I don't think I need to speak about Vietnam anymore because it's quite clear and already mentioned during the presentation. But so VGreen, right? Our charging partner in Vietnam, they are also venturing into the Philippines and Indonesia. And the reason for this was because, similar to Vietnam, both countries has very big population with strong economic growth. However, they are both under-penetrated when it comes to electric vehicles, right? Can you believe that in Indonesia, a country with a population of 300 million people, there's just a few thousand charging points in key city? We do see, right? It is an untapped market opportunity, which is why VGreen will leverage the same playbook in Vietnam, offering, develop our exclusive charging infrastructure over there, offering free charging to customer VinFast, and scaling up their presence across those two countries. They will be a critical part in our strategy to win the Philippines and Indonesia. Now for other global market in North America, in Europe, we partner with third party electrify US, via Blink, to name a few, Bosch in Europe. And the idea behind it was that instead of having to develop ourselves while we focus on Southeast Asia, we can leverage existing infrastructure in this market. I believe that in the US, our customers have access to about 150,000 charging points and over 800,000 in Europe. So, it's a very big number. And VinFast actually have a very good, charging app, allowing you. So it's like an aggregator. Instead of having one app for each of the charging partner, we have everyone into one simple app, and it's also aggregate many, other company, using the same network. So in the past, a lot of non-VinFast customers actually download our app just to have access and know exactly how they should plan their long-term journey in the US, using an EV. Now today, the app is exclusive to VinFast customer, but I just want to highlight that on the charging side, we are well prepared, both on a hardware and on a software basis.
Oh, that's a very interesting app. I think we should have that in Singapore as well, because we have to download like multiple apps just to charge. But is it,
Yeah.
just curious, just out of my curiosity, is the app, so do they must opt in, or you have to ask them to join this, like how does it work?
So you can think of it as three different layers, right? You have different charging company. Each of them have one app, right? And then there will be some companies that aggregating the charging network on those smaller companies like that. So I can give you a few names. Okay, let me see where it is on the slide. Yeah. So Charge Hub, for example, or EVgo, they both have their own app that aggregate, smaller charging companies. And our app actually link up all of these, link up the bigger companies, and also add a few public charging company not within the network of VinFast as well. So we have aggregator, we're aggregator of aggregators. Yeah, that's the idea.
I see. But there's still some companies that don't opt in for this, right? I'm guessing.
Yeah, of course, yeah.
Okay, that's a very interesting concept. Yeah, so just moving on, we're trying to find some of the interesting questions here. Uh, yeah, I think there's one here. With excess supply, I think we did ask this question, but it's a bit more detailed, regarding VinFast itself. So with excess supply from China pushing down global EV prices, how are you seeing this impact market structure in Southeast Asia? Is there room for regional players like VinFast to stay competitive on price, or is it really all about the brand and vertical integration?
I think there's always place for everyone to compete, right? I think obviously there will be pressure of a lower price car from China, and all the players in Southeast Asia needs to prepare for it. In Vietnam, for example, obviously there's still import tax on overseas EV brands, and 30 to 60% that acting as entry barrier to lower price car from countries like China. But at the same time, charging infrastructure will play a role in protecting domestic players. I'm saying this because you shouldn't really think about EV price only as the MSRP or the selling price. You have to think of it from a total cost of ownership point of view as well. And that total cost of ownership also includes charging price. It also includes to some extent access to charging infrastructure, right? In Vietnam at the moment, VinFast is controlling, almost 100% of charging infrastructure, and they're all exclusive to us. So for overseas competitors to really win in Vietnam, they will have to develop their own charging network. And here's the beauty of it. Is the nature of the beast is that even if you have money to deploy, there's no guarantee that you will can develop your own charging infrastructure, because charging is a real estate game, right? There's no guarantee that you have good, site to develop those charging infrastructure. So for foreseeable future in Vietnam, we can see some pressure from Chinese competitors, but they might not be able to scale significantly because of the lack of charging facility. Now, I think the game is a bit more open in Indonesia and Philippines, our other two key markets. However, the fact that uh, there hasn't been a lot of public charging over there means that there's a lot of headrooms, right? And whichever player who knows the priority, who focus on charging, will be able to capitalize on the opportunity. The reality is, Chinese player has come to these two countries much earlier than us, right? And at the moment, I think BYD and Wuling are really doing really well, but they're only selling, at low thousands, meaning that, they haven't really made that significant or pivotal impact yet. And we are still hoping that with our ecosystem approach, we can be, a game changer. Uh, Looking at EV penetration across, key market, I believe that even though Indonesia and Thailand started to electrify 1 or 2 years before Vietnam, um, on absolute term and on EV penetration, the number is on only around 6 to 9% in these two countries compared to the 40% we have in Vietnam. So it is the impact of VinFast, and we believe that we can do the same over there.
Yeah, great. Yeah, thanks for that. I think the next one is slightly linked, but it's more on the demand, and is asking, based on what you're seeing across Vietnam, Indonesia, and India, are EV adoption trends more influenced by policy incentives, infrastructure rollout, like what you mentioned, or consumer perception? So which of this is really proving to be the biggest bottleneck to unlock?
I think the is I think in the short term, right, legislation will play a very significant role. And the good thing is that all of the three countries, they are very open to EV adoption. India in particular is one of the most progressive EV policies globally. So from a legislation point of view, I think it's more of a tailwind than a headwind. I think the importance over the long term is to change customer perception of EV. I'm saying this because obviously we work on project financing for our overseas market, and the question we got a lot from local bank was that EVs, how can you make sure that people in our country can afford such a premium high price tag item? We cannot really see it happen in the foreseeable future. And I keep telling them, perception will change very quickly if you have the right product mix, if you have the right pricing. It doesn't need to be cheap, but it needs to justify, the utilization. You need to justify the competitive edge of the product, right? The reality is the EV perception in China or in Vietnam has changed only within 2 or 3 years. Right? It changed very quickly if you have the right playbook, and we see that customer perception will be the key driver or the key factor differentiating different OEMs in the long term.
Okay, and on from that question, there's another one asking, what does your data really show about who's actually switching to the EVs? Is it first-time car buyers, current ICE owners, or government corporate buyers? And what's really surprised you the most about the switching behavior?
Yeah. I think a lot of people, a lot of our customer, right, went straight from two-wheeler to electric four-wheeler. And the reason because the pricing was really good. At the same time, free charging, right? Meaning that you don't have to worry about gasoline. Young families, young professional, a lot of them are going for the VF3, VF5, VF6. Bigger families trying for VF7 or VF8. I think what would surprise me the most, I would say, is how open taxi companies are to electrification. Because obviously, leaving our sister company GSM aside, a lot of taxi operators in Vietnam has actually proactively switched to EV, and in particular, proactively switched to VinFast. And even though we know it will happen in due course, the rate of it to happen was surprisingly quick, right? We're selling in the thousands now to the other taxi operators. And it's important, because it's about getting the VinFast car out there on the street in the mass, right? And it's about making sure that if people don't own an EV, they still use an EV through taxi. Yeah. So usership instead of ownership is important.
Yeah, I think it was a very good sort of proof of concept for not just the customer, but also for the corporates, right? Like the taxi companies, when you rolled
Yep.
out your own taxi company, and then the rest saw it's like, oh yeah, this works, so they just jumped on and then it's accelerated by itself. Yeah, so that's I
Mhm.
think quite a good way to do that. Okay, one on the sort of the infotainment and also the ADAS or the advanced driver assistance systems, connectivity. So how have your expectations around this evolved in your view over the past 12 to 18 months? So are customers actually using this meaningfully, or is it still more of like a sales point rather than a real differentiator compared to the traditional ICE vehicles or even other EV?
Yeah, I think customers today are very smart, right? So if they look at our features, they they don't see it as just a selling point, right? They want to make sure that they work and they work well. I think our first batch of vehicle, the VFA, the one that I have on my background here, when we first developed it, there was a lot of glitch in the OTA system, and we really have to sit down and think about how we can do it better, and we fix it. The fact that we sell 6,000 of these, almost 6,000 of these vehicles in the US, showing that with the right focus, not only on the vehicle but also on the software, customer will be persuaded, and if you gain consumer confidence. I think the expectation today is that there needs to, infotainment, in-car connectivity, all have to be spot on, right? If you introduce, voice assistant, they have to function, right? It's not just a customer, cosmetic item. ADAS, we are trying really to make sure that ADAS 2 and 2 Plus will be, used widespread across our key models. It's important because, lane assist, park assist, customer wants to have them, video support parking, everything like that. It is it is not a premium features anymore. It's like basic requirement, right? And we're working hard internally, and we're working with external partner like Vector Informatica or Autobrain to ensure that our offering will be bespoke on the ADAS side.
Okay. Yeah. So nowadays, it's a bit like, the car is not just to get you from point A to point B, right? The car must have
Yeah,
a whole computer inside. It must
yeah,
entertain you and guide you. Uh, where do you see this full self-driving? I think you did talk about it at the start a little bit, with Tesla, but where do you
yeah.
see this full self-driving? I think it's ramping up quite a bit in China. In the US, now we have way more Teslas coming out of their own. Do you see or do you foresee yourself, VinFast also going down that route, or is there any kind of development with that side?
Yeah, we got a big ADAS team in Vietnam and in Europe, right? Looking into all sorts of possible solutions. And if you follow the news, right, we invested in Autobrain, an Israeli ADAS company, vision perception company, a few years back. So ADAS is really our focus. Autonomous driving, we have been looking into them, and we will do something in the further future. However, it's not our key priority right now to commercialize them. Partly come from the fact that it is still a more or less technology for a few years into the future. That's number one. Number two, if you think of the customer that we are targeting in Southeast Asia and in India, right? Autonomous driving for a few different reasons, both on the demand side and from the market side as well, isn't something that they prioritize yet. And we need to make sure that the product that we are developing fit with the requirement with the customer first, right? So yeah, something we look into and we can execute, but it will not be our priority for in the short term.
Okay, great. Maybe we'll just take one more question since time is a bit short. It's asking about the batteries and things. So with global competition heating up among low-cost LFP, lithium iron phosphate vehicles, example, like BYD, domestic Chinese brands, how does VinFast maintain a margin as well as a brand advantage in Southeast Asia and India?
The question is on battery. Is it from branding? Because on the battery side, I can give you some insights, right? So at the moment, we have one battery pack and one battery cell factory in Vietnam. Both of them are located within the same industrial park with our new factory in Hà Tĩnh in Vietnam. And we believe that we are producing competitive LFP batteries at the moment, especially for the affordable models. For the bigger models, right, we are still using a combination between MNC and LFP, and there's a reason for it, right? Sometimes, for some particular market, due to homologation process, right, and NMC is still required. And we are producing some and sourcing some from external partner, and that's the reason for it, right? Sometimes it's better to buy than to develop if it's smaller scale. But yeah, our battery company VinES, as well as the development team within VinFast, constantly look for new innovation, and we make sure that with any innovation happening on the battery space, we'll be one of the first to get there. And we obviously will do feasibility study to see the new technology, whether it's applicable, whether it will be viable from a commercial point of view for our customer as well. Um, so hopefully that addressed the question on battery. Yeah.
Okay, maybe just one, since I have a bit of time here on my
Mm.
end, just one question. What do you think of, the battery swapping that they have? I think they started it in China, right? Where they do, I think
Yeah.
NIO is the one that does the battery swapping, right? Based on some reviews that I've heard, it's really well received when it works well, right? You just go
Yeah.
in, don't charge, you just swap your battery. But of course, the cost is extremely high, I'm guessing.
Mm.
And you need to go to a certain location to do it. What are your thoughts on that? Do you see it being sort of, commercially available to almost everyone in the future?
So, I'm based in Europe, right? And I'm aware that battery swapping technology has come to Europe very early on in the early 2010s, and it didn't really fly.
Mm.
It's nothing to do, nothing wrong with the technology. I think it's great. It's just that, it is a competing technology compared to traditional charging. It requires a lot of capital expenditure. So hats off to NIO for their great focus and their commitment to develop those battery swapping network in China, but ultimately, right, for any OEM, it's one or another. Because if you want to scale your charging infrastructure, right, you need to find a way to do it in the most efficient manner. For VinFast today, right, we already look at battery swapping very early on in our electrification process, and after careful study, we have put it to a side for foreseeable future, because we want any capital deployment now is solely focused on rapid expansion of the traditional charging technology. Right, it will help us bring the EV experience to a much bigger population in our key market. Um, I think I do believe that battery swapping will have its place in the EV world. I think it works really well in China. It works really well in India, but more so on the electric two-wheeler side, right? Because obviously, swapping a smaller pack like this for a two-wheeler will take much quicker time and lower capex compared to developing the whole architecture of a car that allows you to take out the battery within 3 to 5 minutes. Yeah. So yeah,
Mm.
that there is place for it, there is potential for it, but it's not something for everyone.
Yeah, yeah, that's true. That's true. Yeah, but, so I think we have reached 1 p.m., so reached the time that we have for today. Maybe I'd like to hand it over to you for some closing remarks before I close off the session.
Yeah, sure. So once again, thank you very much for having me on the show today, and thank you for our audience to turn up during your lunchtime. Um, I could say, right, it is the beginning. It's still the beginning for VinFast on a global stage, and we are working really hard. And this year, we expect to have a lot of good news. We already announced, the new vehicle platform, new vehicle architecture in the previous earnings call. We'll talk a bit more about, our new factory in the next earnings call. And once again, we are ramping up our sales to get to the delivery target this year of at least doubling what the 97,000 we had last year, right? So expect news from us, and continue follow us as we venture, in Vietnam and globally.
Thanks again so much for taking your time as well, during this 1 hour. I think you're based in the UK, so it's really quite early now, right?
Yeah,
So
I'm
thanks.
early riser. 5 a.m. is actually okay for me.
Oh, early bird catches the worm. Yeah,
Yeah,
great to hear that. So thanks again, Chien, for taking the time, and for Vinvas for giving this great presentation and Q&A. So I think that's all we have for today. Thanks the audience for attending as well, and we hope to see you next time at our next Corporate Insights webinar. Thank you.
thank you.